Hey, how you doing, everyone? This is Shlomo Errol here, your real estate agent in the Chicago metro area. And today I have a guest, and he's a lender with Cypress Mortgage, Amiel Steuerman. How you doing, Amiel?
I'm great. Thanks for having me, Shlomo.
Absolutely. Thank you for joining us. And of course, Amiel, you're a lender, so we're here to talk about mortgages and what's going on in the market. We hear the news all over, but there is nothing like getting an accurate information from a pro. So, Amiel, it looks like maybe a couple of sentences. Maybe you want to tell us a little bit about yourself and the company.
Sure. Cypress Mortgage is a company that I started in 2003. So I've been doing this for quite a while now. I'm an independent mortgage broker, which means I go out to the market and find what is the best fit for any given home buyer or investment investor for that matter, because some people buy a property to live in as their home. Some people want to buy property for investment purposes and get rental income. And have a lot of experience and knowledge. Happy to share it.
Perfect. Well, great. So, let's jump into it. The market. How is the market looking now? Can you tell us a little bit on your side, which obviously it's working more with the buyers? How does the market look?
Okay, so, like I was mentioning earlier, you'd literally have to be living in a cave to not know that interest rates have gone up a lot in the recent past. So, basically what's happening is as inflation came into play in the economy, it really started driving interest rates up in general, and mortgage rates, are a part of that economy. And so I'd say that, what was kind of shocking to the system and to the housing market is not so much that they went up, but how fast they went up and how much they went up. So, about a year ago, you could get a 30-year fixed mortgage for 3%, which is just a crazy low, interest rate. They've gone up to depending on the situation, they've gone all the way up to about 7%. And there are always fluctuations in the financial markets, including for mortgage rates. They go up a little, they come down a little bit. Right now, as of today, last I checked, the interest rate for a 30-year fixed is about 6.25. But every situation is a little bit different. So it depends on the property type. It depends on whether you're going to be living in the property or renting it out for rental income. Mm-hmm. So different factors come into play as to what interest rate pertains to your specific situation. But that's kind of where interest rates are today.
It's good to know these are the rates today. So pretty much if we're looking at a home, someone is going to purchase their home, if they bought it a year ago, year and a half ago, for $500,000 at 3%, they would pay a lot less than paying at 6.25. So how are you dealing with that? I know there is some kind of programs and options to kind of overcome it because, at the end of the day, buying and owning your home is much better than renting. So what is the option that we have?
No question. So, one of the things I'll point out about rates is that you hit the nail right on the head because 7%, believe it or not, if you look at mortgage rates in the United States over the last, 30, 40 years, the average rate was actually 7, actually a little higher than 7. And just as a point of reference, in 1981 was the peak 18% mortgage rates. Can you imagine? So all of a sudden, 7 doesn't sound that bad. But like I've mentioned to many of my clients, the only thing that really matters for any given buyer at any point in time is what is the monthly payment for any property that they're looking at right now, which is, if this is when they want to buy. Because, interest rates have gone up so fast, so quickly, the market has changed. There's not that many buyers lining up anymore. And all of a sudden now sellers are more motivated to help, in whatever way they can to get their property sold. So this comes into play with getting lower interest rates for the buyers that previously was really hard to get and really expensive. But because of the way the market is operating right now, lenders have come up with a way where you can reduce the interest rate either temporarily or permanently by paying this thing called points. And, you know, clients have historically always been curious about what are these interest rates I see advertised, and does it make sense or does it not make sense to pay points? And, you know, my stock answer to the question about paying points is it's a great way to get a lower interest rate, especially if somebody else is going to pay the points for you. And that's the new thing that's come up recently in the last few months is mortgage lenders have come up with these buy down programs such that it's the seller that actually provides the cost to buy the rate down. And, you know, as a simple example, let's say the rate right now is 6.25%. And the seller is willing to make some sort of a seller concession, some sort of a credit to help move the property and help the buyer be more interested and motivated. So they'll pay, you know, $3,000, which will buy the interest rate down from, you know, let's say 6.25% to 5.75%, so 5.75%. That's an automatic payment reduction. So again, looking at what the monthly payment is, you get a lower payment. And you don't have to pay for it because the seller paid for it. The price stays the same, so you're not lowering the price of the home. You're just, you know, making the payment more affordable for the buyer, and it's a win-win really for both sides because the seller gets to move the property quicker. The buyer ends up getting a lower interest rate, so the whole, you know, freak out about rates going up, all of a sudden it just goes away, and they have a more affordable payment.
Okay, great. It's great. So it's part of negotiating on our behalf, and
Correct.
that's something. So we're pretty much just to make sure that, you know, the people out there understand. So pretty much we are asking from the seller to pay the points that buys us a lower mortgage rate. So if it's
That's
a 6.25, they buy the points, you get it to 5.75, 5.75. Actually, we're asking from the seller. So it's kind of a negotiating like, hey, we like your home. We put the offer, you're gonna get what you want. We just need the extra money to close on it. And you know, for me, it sounds reasonable. It's not something. So, how do you see it work? Because you work with clients. Does it is something that you already used, like in with previous clients, or you're currently working with clients on that?
Yeah, I have absolutely, and you know, it's a good question you ask because there are different versions of this buy down program. One of the transactions I was in recently, helping a client with their request to get a lower rate and pay points was something that, you know, they started thinking about after they already finished their negotiation. They're in the middle of the process. They already signed the contract. But this person was very interested in getting a lower rate and finding out what the cost would be, even though they would be paying it themselves. They liked the idea of paying money, even though it was going to be out of their own pocket, because they knew they were going to be in the property long term and they wanted to have that lower payment. And then I help them understand whether it's worth it or not by doing this break-even cost analysis.
Okay, so that's great. So I see that people are already using it, so that's good. And also, as a real estate agent, the market changed really fast, like we said, and we have to come with new solutions. At the end of the day, is it better to buy than rent? Yes. You have to look at your financials and what you can afford. But it's already, you know, it's good to see that solutions comes pretty fast. And it's not about only the sellers, like I want my price and this is what I'm gonna, you know, sell it for and take it or leave it. We can see right now that we can actually negotiate, and I'm gonna say negotiate the interest with the seller. So that's kind of interesting how this solution. So this is perfect. You know, this is great information, and again, accurate information. And I'm gonna mention that our, you know, just to talk with us and understand, talking with you, if anyone wants to call you or email you and get more information about how much they can qualify, it doesn't cost you any money. You only pay us as a real estate agent as a lender if you close on your home. Again, thank you, Amiel. This is really great information. We're gonna have you here again and hopefully multiple times to give us the update on the market and maybe something's on new solutions to this market.
Thanks for having me, Shlomo. Happy to help.
Thank you, Amiel. We'll talk with you soon. Thank you, guys. If you want to reach out to us, our emails and phone numbers are right here. I'll see you in the next video.